Hi traders, I've got a trade that I'm looking at on the Australian dollar Canadian dollar pair, and my reasoning for this trade is I was wanting to buy Canadian dollar after the CPI inflation miss that was out last week. The forecast was 1.7%. I think it came out about 2.2%, and that was a significant increase in the CPI rate. Now, in the context of the Bank of Canada, they've been quite neutral and a little bit dovish recently, and so the Canadian dollar was sold off, and they were saying we're not necessarily going to be pressing the gasser on raising interest rates, even though the economy's doing okay. There's some mixed messages, but bottom line was we were in a quite dovish stance. But they said they were going to be data dependent. Now, obviously, they want to keep that CPI target in the 2% range, and overshooting the 2% means that they're much more likely to be raising interest rates. So I had a little look and I think, yeah, I definitely want to be looking at buying the Canadian dollar, but which pair to buy it against? Now, at first I thought, could I buy it against the yen or the Swiss franc? But I was reluctant to do that because of the trade wars coming out between Trump and China. And if anything that's going to cause people to grab safe havens currencies, it's going to be a trade war between the States and China. So I thought, what's the other uh, currency to pair Canadian dollar with? And I thought Australian dollar. And the reason I thought the Australian dollar was because if the trade war intensified between Trump and China, obviously Trump's got this American first policy, and everyone's trying to work out what does that really mean? Is it going to be a full-on trade war between China and US? And so markets get spooked. And the Australian economy is very closely linked with China. So if anyone's going to get caught up in that, it's going to be Australia. So I thought this was quite a good pairing. So if the trade war rhetoric stepped up, then there's only going to be pressure on the Australian dollar. So that would lend itself to an Australian dollar, Canadian dollar short. The other factor was there was no major news out for all of this week for Australia or Canada. So I thought that general sentiment should play in throughout the week. So I thought, okay, this is a trade I can keep for the week. Just put a take profit down there, but obviously I'm more looking at the timing of it because I want to trade the anticipation and the sentiment and the feeling of the market with these two pairs being in opposition to one another. So the way I technically worked it was you can see you've got this down leg here, and then you've got to retrace up to the 50% fib level of this last down move. So, you know, if you were looking sort of A, B, C, D trading, you got the A leg, B leg, and then you could have your C, D leg down to here really. But I'm not thinking of going for anything that length. I just want to see if I can get a little pop down here for the week, and I've just put the stop above the recent high. That's my sort of I'm completely wrong level. So that's my trade. I'll let you know how it goes. I'm holding this for the whole week, and then I'm going to be looking at the data that comes out the week after, and then make decisions from there. Obviously, if the price just drops down and hits my target when I'm away from the terminal, well, okay, there's worse problems to have in life than that. Okay, guys, have a great day trading. Good to be back making videos, and I hope you guys are well. Cheers, bye.